All right. Welcome everybody to join our Economic Recovery V, U or L shape webinar brought to you by Kananga and managed by Wellford. And I'm the moderator for today's session. And we are very excited to have you here tonight on a Friday night to join us in this webinar. Now, before we begin, I just want to check the internet connectivity with you. So if you can see my screen and you can see our webcam, please type yes in the chat box, okay, and let us know. If you can see our screen and hear our voice, see the visual, hear our audio very nicely, type yes in the chat box. All right, cool. Yeah, so many interaction from you. Well, as usual, this is another uh, fully overwhelming session because we have just so many response to join our webinar today. So we could probably hit maximum capacity real soon. So if any of your friends can't log in, please ask them to watch from our Facebook Live, okay, instead. So if you are watching from Facebook Live, I want to welcome you to tune in to catch this webinar brought to you by Kananga. And today we have a very, very intriguing session where I myself also want to figure out, which is economy recovery. Is it U, V, or L shape? Now, many of you here have one way or another been impacted by COVID-19, I'm sure. And this health crisis around the world has become a pandemic and have not only hit us from a health perspective, but also bring the economy to a standstill, whereby we have seen many bankruptcies happening in the SME space around the world. We'll see that where travels are halted, planes are grounded, when retail malls are closed. So there'll be many financial repercussions happening around the world. So we have seen that the US unemployment rate tonight will probably reach double digit, more than 10%. So that's the forecast. So many major economies have faced unprecedentedly high unemployment rate. So when this health crisis had brought the world to a standstill, so will we have a smooth recovery? If we have a smooth recovery, will it be V-shaped, U-shaped, or L-shaped? So that's where our speaker today, which is none other than Mr. Ooi Kok Hwa, will share with us this evening. All right, Mr. Ooi, are you ready?
Yes.
All right, awesome. But before we begin, let's talk about a disclaimer. Whatever we share in this Kananga webinar is only for educational purpose. So in no way that we give you any buy or sell recommendation to buy any stocks. So if you decide to buy or sell any companies or any structured products, you do it at your own risk. Okay, none of us or Kananga are responsible for your financial decisions. Okay. So Kananga has a series of webinars that they want to bring to you to educate you to become a well-informed investor. And for this Q2, which is April, May, and June, there's two more sessions in May and June, which is happening next in the 19th of May, which will talk about unleash the tactics of dissecting technical charts. So if you have any questions about charts, our speaker Derek Lee will share with you how he dissects charts and show you where are the possible trading opportunities. So if you can ask him any live chart, he will dissect it for you. All right, so long that the number has. So next we have the next session in June, the shine of miners. Now, right now, I think with QE is rolling out, when unlimited QE is rolled out in US, ECB has committed to a lot of bond purchase program. Bank of Japan has also committed to unprecedentedly big bond purchase program. So will gold shine? So that's what we will discuss in the June webinar, the shine of miners. Miners refer to the gold and silver mining companies. All right, so this is what we will have in the next 2 months. So stay tuned for more webinars brought to you by Kananga Investment Bank. So let me have the pleasure to introduce our speaker today, which is Mr. Ooi. Mr. Ooi is a managing partner of MRR Consulting, dealing mainly with business appraisal, investment, and financial training. Presently, he is a licensed investment advisor by the Securities Commission Malaysia. He's also CFA, CFE, and ICVS. Right now, personally, I've attended Mr. Ooi seminar before in Berjaya Times Square, and today I'm very excited to invite him to come to this Kenanga webinar again to share with you his session. Now, he's a regular invited speaker for Kenanga Investment Bank, and today he will continue. Okay, he is amazing sharing with you about whether this economy recovery is V, U, or L shape. All right, over to you, Mr. Ooi.
Hi, good evening, everyone. First of all, I need to thank Kenanga for giving me a chance to share with you. I'll share with you on basically answering three questions. When will end? Impacts from the economy and financial impacts, and then as last one will be how to invest during these periods. So as you know, to answer today's topics on V, U, and L shape, actually quite difficult. Okay, so the only things that actually because nobody I think none actually have actually experienced a pandemic before. So I'll share with you that the closest that we can think of will be the 100 years ago, the pandemic's Spanish flu. Okay, and today when we talk about V, U, and L, basically is we talk about depends on everything on the COVID-19. Now, if you look,
Mr. Wing, if you have a slide you want to share with us, you can share your screen. Okay, if you have prepared some slide to share with us, you can share your screen.
I can show you the screen right now, right?
Yes, you can.
Okay. Now, if you look through the pandemic Spanish flu, 1918 to 1920, okay, this will give you the guide on how to handle this pandemic COVID-19. Okay. Now, if you look through this diagram from pandemic Spanish flu in 1918 to 1920.
Hang on a minute, we are not seeing your screen yet. Okay, you did not share your screen.
Oh, I didn't share my screen.
Yes, you need to click share your screen so we can
wait,
see.
Okay, wait. Wait. Okay.
Yes, excellent. Yeah, we're now seeing your screen right now. Yeah,
so you
perfect.
can actually, yes, okay. So I'm talking about the Spanish flu, 1918 to 1920, okay, to give us a guide on how to handle this pandemic, COVID-19. Okay, why? Because this is actually the closest to us and 100 years ago. Okay, if you look through this picture, looks quite similar, right? I mean, now we have a lot of people actually need to wear masks, and you can see from here the hospital. Okay, every day now you switch on TV, you can see some of the hospitals, some of the exhibitions hall turn into hospitals. Okay, this is actually Spanish flu in 1918 to 1920, and you can see from this public notice, okay, in 1918, okay, basically the spread of the Spanish flu, okay, and it says that the second paragraph, all public gathering consisting of 10 or more are prohibited. Okay, our government also followed these rules the 100 years ago, that not more than 10. And in fact, actually 100 years ago, they already said it cannot have gathering more than 10, okay, during the Spanish flu. Okay, these pictures again, police, nurses, also all wearing masks. Then you can see from here on the people wearing masks, okay, you must wear mask or go to jail. Okay, now this Spanish flu actually started in 1918 March and ended in actually 2 years later, February 1920. So actually the whole duration is actually for 2 years. And the total death is actually, you add the World War One and World War Two together, roughly 50 million deaths. And the reported cases of this Spanish flu, okay, during the summertime, just like right now, everyone happy, everything cool off, right? So during summertime, the number of cases actually slowing down. But the second wave start in August 1918. And the peak actually is when in September until November 1918. That means if this COVID-19, the pattern actually is similar to the Spanish flu, we may see the peak actually in September and November. That's why the key risk now is actually if things start to cool down, but you can see from the other countries, just like India, Pakistan, the number of cases getting higher, and Russia numbers getting higher, Brazil cases getting higher. But whereas the US number a bit flat, while some of European countries flat and slowing down, but Asian countries, it depends. So like Malaysia, China, New Zealand, Australia, handling quite well. But you can see some other countries actually, like African countries, the numbers actually getting higher, and the curve is getting steeper and steeper. So actually, some country things may slow down, but some country numbers getting higher. So my view here is actually it will be a wave 1, wave 2, wave 3, wave 4. So now, if you go back to the Spanish flu in 1918 and 1920, actually the key risk actually is September and November. Why? Because when it comes to October, all those US, European country, the cold weather come in, you actually cannot differentiate between flu or COVID-19, a normal flu or COVID-19. That is the reason why the risk is getting higher. You actually don't know. And it's actually quite normal to have flu during those winter periods. So that's why the cases will get higher. And you can see from this number that actually the highest number, like the US alone in October, 195,000 actually, people died in that month alone. And you can see from this diagram, it's actually the second wave that killed the most people. So one I want to highlight over here is that be careful of the second wave. And you can see right now in Malaysia, even though less than 100, 50, 60, will start slowing open up. But you can see US, we are talking about a few hundred to thousand, but some of the states actually start open up. So you can understand they are preparing to face the second wave. So when will it end? As I said to you, when you talk about the V shape, U shape, and L shape, basically all depends on how we look at the COVID-19 and when we can get the vaccine. I'll talk about it soon. Now, you look at the diagram here, as I mentioned to you just now, some is actually curves getting higher, some actually slowing down already. So every country actually have a different curve. So in short, actually the whole world, we are talking about global lockdown. No one will open up the borders. So as a result, airline will have a tough time. Tourism, all this will have a tough time, definitely. Okay, because this country may open up, but may slow down, but other country, the numbers getting higher, you dare not open your border. So, and this will continue for until maybe next year. So airline actually facing a tough time, definitely. Now, I want to highlight to you is actually, most likely you also read through the news, that recently the Washington Post highlighted that on the 5th of May, that actually the CDC actually do have give some internal report that by June 1st, the US cases may surge to 200,000 per day. Right now, it's on average for 30,000. So the number of death cases per day may reach 3,000. So you notice that the internal, this number White House says may not be true, not true, but they actually aware that the numbers are actually getting higher soon. Okay, but because this lockdown, the damage to the economy is actually huge. That's why some states actually just need to open it. Okay. Now, this slide, I want to highlight to you that, of course, some people say, you know, we actually need to have a herd immunity. Okay, so basically, it means hopefully, you know, you have this antibody, then you will not catch it second time. But the WHO says you may catch a second time. My key point here is that now, January until now, okay, the first cases, I mean, say roughly January until now, only 4 months, 5 months. Anyone actually catch a second time? What will be the health impact to these people? Nobody know. Okay. Actually, nobody know that. No, what will happen to your health conditions if you catch the second time? Okay, the first time you say healthy, no problem. Then second time, what? If you catch it, so what will the impact? Nobody know. At the moment, I think a lot of people actually, the cases is quite mild, then not that serious. Okay, can recover. But the WHO says you can catch a second time. Okay, and will the second time worse than the first time? Don't know yet. And sometimes, if you look through 1918 until now, I mean 1918 Spanish flu, those baby born during 1918 to 1920, and versus those baby born after 1920, those born during 1918 to 1920, their health in general, they are weaker. Actually, the research shows that there are a lot of health problems, those born in 1918 to 1920. As compared to those born after 1920, they're more healthy. And they also have a research showing that those gone through 1918 to 1920, I think recently also have a report saying that they do have other problems, especially on the mental problem. The stress level quite high, so that's why we need to take care of ourselves. And seriously, we don't know this virus because it's different. Why different? Because it's not from the normal influenza flu, because they are actually close to, the SARS, MERS, no, that's why it's called coronavirus. So it's different. That's why, and we actually don't know, okay, how will actually give impact to us on long term, okay. Now, every expert says that the whole recovery depends on when we can get the vaccines. I also know, everyone also know. US President Donald Trump says you'll get it by year end. Okay, every country, try to get it as soon as possible. Now, the different stages of vaccine development, and WHO says right now got 102, doing on these vaccine developments, and out of these 102, 8 actually in the phase 2. That means 100 target people. Okay, start to see the impact. But you do have stage 3 and stage 4. We are talking about thousands of people, to test the effectiveness of these vaccines. And you have this key problem here. In Zhejiang, okay, they discovered that actually do have at least 30 mutated strains. So now, and this actually give those scientists the job actually getting tougher. If you say, all the analysts say that the whole recovery depends on the vaccines. Now, the Zhejiang actually research says that we do have 30 types of mutated strains, and actually make the whoever involved in the vaccine development the job even tougher. And the key question now is this: we not even have antiviral medicines. Then we don't talk about vaccines. So if you talk about the antiviral, we don't even talk about. don't have medicine to cure it. How to talk about vaccines? That's why the recent French actually specialist, actually advisor to WHO, he says that at least 1 year. Hong Kong as well, the specialist also says at least 1 year. 1 year from now means till next year, May. Okay, at least 1 year. So, and you notice that, and this virus, quite clever, it can mutate. So, if we're really not too sure that when all this vaccine development, some actually protein, RNA, some actually, all this vector, DNA. So actually, we're not too sure that this vaccine can cure all the 30, or can cure half, or can just cure one of the strain. So actually, we don't know. So that's why it makes this job actually quite difficult. So if let's say, only cure half, then how about the rest of the strains? So it makes people, wonder, So if I actually need to inject more than 1 or 2 or 3, or so to fully immune to all the virus, or how? That's why my view here is actually very tough, very, very tough. So now, in 1976, if you go back to 1976, swine flu outbreak, at that time, the US president, okay, why I want to show to you this slide is because this one is actually quite interesting, quite close to the current situations. Why? Because at that time, the US president, George Ford, because of this swine flu outbreak, so he actually won, this actually the photos shows, received the vaccine, okay, from this swine flu outbreak, and he rushed, that he want the American, to get injected. And this actually shows, this photo shows to you that, all these Americans injected with these vaccines in 1976. And what happened? Within 10 months, 25% of US populations, we are talking about 45 million citizens, get vaccinated. However, is this out of these 45 million, 400 people developed this GBS, Guillain-Barré syndrome, where it's actually a very rare, serious, and cost on the immune system attack. So my view here is actually, that's why American, if you ask them to inject vaccine, some of them actually, the normal vaccine, all our normal kids actually get injected. They also not so keen to let their kids actually injected with all the vaccine. So my key point here is, when you rush and we actually not really tested to check the effectiveness, and we're talking about 45 million people, and out of these 45 million, 450 people, do develop this GBS. So this is actually the key risk. Now my next question here is actually, if this vaccine available, developed by US in November, December, you're interested to get vaccinated or not? Okay, this is actually from CDC. He says that this vaccine, 1976, the swine flu vaccine, basically is on 100,000 people. One actually, do develop this GBS syndrome, but the risk is there. But how about if, let's say, by year end, actually develop these vaccines, will you dare to take and inject in your body? So my key point here is actually, I don't think many. You ask me, I would not. Okay, you ask me whether to get my family members get injected, I will say wait for a while first. So now the next one. Now we're going to talk about the economic and financial impacts. After answer the earlier parts, so you notice that from the earlier slides, from the Spanish flu, from the vaccines, then you notice that, actually, every expert says you need to develop, depends on vaccine, and this vaccine only available next year. So whatever we are facing right now, the normal norms will be like this for long period of time. So of course, going to give huge impact on the economy as well as the financials to us. Now, when we talk about V-shape, all the analysts say V-shape. V-shape means that the lowest points of the stock market is actually on the 23rd of March, and now actually on the way of recovery. And most of economic, those researchers in US, they say that the lowest point in not all, they say that economics will recover by third quarter. That means the second quarter, that's actually, right now, is actually the lowest point. With this, open up, they expect the economic recovery on third quarter. So that means stock market you are seeing right now is on the way to recover. So when you see the Dow Jones, the diagram is look like this, it means we'll go up higher. Is it true? My view here is actually, as a share view just now, that vaccine may not be available only next year. That means unlikely to be V-shape. Okay. How about U-shape? U-shape means that everyone talk about sell in May and go away. That means you're going to have one more dip down. That means actually, May, June, July onwards, market will come down. Then after that, by August, market will start to bottom out and recover already. That means the stock market will bottom up in the second quarter rather than the March. Then economic recovery maybe in the fourth quarter. I also don't think so. Okay. My view here is actually I think will be L-shape. That means the lowest point, the economic recovery next year, okay, and lowest point most likely next year, economy at lowest point next year, okay. Then how about the stock markets? My view here will be roughly September to December, that period. Why? When all these winter countries start to have the flu season, this is where that the most likely you will see market will come down. When the cases actually jump higher, this is where you start to see the second wave. So I think at that time, market will drop to low levels, to very low levels. Okay, that's why I expect the L shape. Okay. So from this slide, you notice that at the moment, everyone talk about the health crisis, how to take care, make sure everyone is safe, But you notice that it should lead to the economic crisis and need a lot of stimulus packages, every country all involved, and dumping trillion of money, billions actually to help. And because of low oil prices, that's why it lead to some banks, the turn bad. I mean the loans turn bad. But at the moment, you ask me, the most bank, the fundamentals remain healthy. Okay. Now, how about Malaysia? Bank Negara says you have 6 months until September. And the key question here is, after October, are you able to service your loan? Then, if cannot, your business remain bad. Vaccine only available next year. So, this like the MCO, that means to me, I look at it like the soft lockdown will continue until next year. So if you're involved in those tourism, global lockdown, airlines will continue to be tough. Only local, no flights then, but international flight definitely difficult. Then tourism will be difficult. Then some of the services, the hotel business will be tough. Okay. Oil and gas, given low oil prices, same thing. The movement will be stopped. Okay. And this soft lockdown will continue for a long period of time. And from this financial crisis actually lead to another problem, sovereign debt crisis. They say, sure not. Now, if you remember 2008, when you have this financial crisis in US, what happened after 1 or 2 years later? You have Greece, the Europe crisis. Why happening of Greece crisis? Because During the financial crisis in 2008, 2009, everyone have a stimulus package 1 and 2, and some of them, when they spend money, borrow money, the debt level went up to very high level, and they start up 1 year later, they start to have a downgrade risk. So that's the reason why from this health crisis can lead to economic crisis, which actually happen now. Later on may lead to some form of the financial crisis, may not be a big one. I don't think the bank will collapse, but through that crisis, some country may have problems. And you already have Argentina says no, need substantial debt relief, because they actually have problem to service the IMF debts. Okay, now this is one interesting diagram from the Economist 2 weeks ago. Okay, rating house also use about the same, roughly, not this brief, but roughly a bit this indicator to judge the country. If you notice that Philippines, Thailand, Vietnam, Indonesia, they rank higher than us. And on the right hand side, BBB plus, these are S&P, their S&P rating. They're actually lower than us. We are actually ranked number 25 and we are A minus. So you notice that. So my key point here is be prepared. Okay, so risk getting higher. If you continue to borrow money, more debts, to have the money to come out with all the stimulus package. If this thing prolong, then risk to us, downgrade risk, the risk is getting higher. That one, you notice that in general, we actually rank lower than all these ASEAN countries. Those are highlighted in red color. Now, this one, some of you may have seen before, saying that actually lowest point this year, recovery next year. And you can see from here, US actually dropped to negative 5.9 this year. Next year, up 4.7. China this year dropped 1.2, still positive. Next year, jump 9.2. Okay, and the worldwide is actually lowest point this year, negative 9, negative 3. Next year, 5.8. Now I want to show you one number, because some of you after listening to me for half an hour, feel quite sad. Okay, don't be so sad. Okay, you can see over here, if you plot a diagram, actually recovery next year. The issue now is actually when is actually the lowest point. Okay, now our market right now, you notice that a lot of retailers, some people ask me, no, the stock's getting higher. How? My view here is actually when the market actually filled with the retailers and not many institutional inside the market, then you need to be very careful. Okay, so when retailer says worst is over, you need to be even more careful. Okay, my view here is actually it will come down. Okay, but you cannot be too negative. Why? Because we're talking about negative economy will go up next year. The key question is actually when it will be the lowest point. You notice that Warren Buffett holding 130 billion cash. He's also not buying. Why he's not buying? He's selling, he's not buying. Because he cannot find value. Same, I also cannot find values. I will wait. So one of the key strategy now is actually, if you're a long-term investor, then you hold cash. Good value, then you buy, waiting to buy. Anytime waiting to buy. Now, why I stress this point? In 1918 to 1920, after 1920, the world economy have a solid 9 years of the boom market until 1929 Great Depressions. The world market just jumped like mad until the stock market jumped until to the level you cannot believe it in 1929 Great Depressions. So if history repeat, it means that after 2021, if I say things recover, the market will go up all the way. You ask me, Mr. Wing, confirm 9 years or not? Like 1920 to 1929. I don't know, but I'll say at least a few years. Okay, that kind of solid rally. So that's why when the market dropped to low level, any stocks, any good fundamental stocks actually good. You find actually the good value, it's selling at very cheap level, it's a time to buy. That's why your cash must be ready. Okay, get ready. But of course, don't rush in now. Now, from earlier diagram here, actually I do some simple calculations. These actually IMF numbers. It says that US total GDP in trillion is actually 21.4 trillion, accounted for the whole world 25%. And if negative 5.9% means what? It means they will lost roughly about negative 1.3%. I mean, negative 1.3 trillion this year lost. And if you look through all the recent stimulus packages by the Fed, basically about 3 trillion actually should be enough to help to cushion the drop. Okay, same as Europe also come out with the packages about 1.10 billion. Okay, so over here, if Europe is a negative 7.5, so if you times 18.7 trillion, you're talking about negative 1.4, roughly about, their stimulus package about 1 trillion, I think it's about there. Okay, so all this will help to cushion the drop. So then your next question is, IMF forecast accurate or not? My question here is actually, if you look through history, especially period of the beginning forecast versus the later forecast, you notice that a lot of time actually they do have revisions. So the initial forecast may be wrong. I think they may need to revise it. Okay. If you look through the Dow Jones right now, okay, the current Dow Jones level is actually going to break the moving average 20. It appears to me that actually quite weak right now already. Okay, really weak. You notice that market go up, then towards the end, before close the 1 or 2 hours, you notice that sell down already. Okay, the market's just waiting for one bad news to sell down. Okay. This is the latest magazine. I mean, the economy is the latest issues, shows that the dangerous gap between the market and the real economy. So because the valuation getting higher, but the economy is getting bad. And you notice then, last 2 days, ADP number actually bad, but stock market getting higher. Okay, I'm not too sure today. I think same scenario because they just reported the non-farm payroll. The numbers actually, the job loss actually, 21 million compared to 20.5 million as compared to the 22 million forecast expected. So market expect more bad, but this one less bad, consider good news. So you notice that market take it this way. If the bad news actually not that bad, consider good news, then market will go up. So continue to go higher. That's the reason why this economy is the cover the latest issues saying that the dangerous gap between the stock markets versus the economy. So be careful. This is actually the ADP job loss numbers. Okay. Now, talk about US, now talk about Malaysia. Bank Negara forecast is negative 2%. Okay, of course, this forecast made in actually, earlier. Okay. So, and nowadays, this a lot of analysts says, oh no, this year may be negative 3. Some say, oh, negative 4. No, some say it's negative 6. Recently, one research report said negative 8. Okay, how they come out negative 8? Now, with this seminar, I share with you. Our Prime Minister say, every day we lost 2.4 billion. Assuming 50 days, on average, roughly 50 days, some actually allowed, some actually not yet, some fully open, some not full open, roughly 50 days on average. So you are talking about 120 billion loss. 120 billion loss, if you notice that compared to our 2019, total GDP is 1.4 trillion. It's 8.4%. Friends, so you notice that expect our number to go down, the revised number to go down, maybe around that levels. Okay. Now, please take note. Is this lockdown? Will we have a second lockdown? My view here is actually if based on the Spanish flu going to have a second the second wave, most likely we're going to have a second lockdown, third lockdown. So all these will contribute to more negative of GDPs, including worldwide as well. Okay. Very simple reasons. The vaccine only available next year. Okay. And we are talking about the faster that we can get. Normally it's actually to 3-5 years. Okay. And this is actually the slide from the earlier where we're talking about the economic development growth from Bank Negara. Okay, we mitigated by all the economic stimulus packages. Then we have this 250 billion. Of course, these 250 billion, some of it is actually part of it is actually from the loans. Okay, and we do have injections, no, to help the household, no, individuals. Okay, every country doing that. Now we want to look through individual sectors, and please take note, services accounted roughly about 57%. Okay, 57% coming to 60%. Now we look through the next slides actually to look in details the service sectors. What do you think about the wholesale and retail? Tough, right? Tough, right? Lockdown, right? Lockdown, open out, later lockdown, right? So mall, you dare not go to mall, right? You notice that your credit card spending also come down, right? So you ask me, and this accounted for about 30% of the total services. To me, I think it's tough. Finance sectors, less transactions. Okay. ICT remains solid. Okay. Then how about the real estates and business services? You ask me, will you consider buying a house given oversupplies? My view here is actually property sectors will have tough time. They really have tough time. How about those under constructions, development, all this? To me, the risk is there. The risk that because you open up, then later on lockdown. The lockdown again, then open up, then lockdown again, and some of this oversupply issue is quite bad already. And like in Malaysia, on average, roughly about 10 offices, 3 empty. And everything go online. Actually, you may not need office. And everyone say work from home. You may not need office. Then how about retail mall? People prefer buy online. Then same thing. People don't go to the mall anymore because too many people. So you're scared. So again, tough time. This will affect the REITs as well. Those office REITs and the retail REITs as well. Transportations having tough time. Okay, because you're not moving. Going up. Then food, beverages, and accommodation. Hotel line. Oh, you noticed that recently, this hotel's closed down, that hotel closed down. You ask me, more to come. Because some of the hotels actually depends on the tourists. Some depends on Chinese tourists. They're not coming. For business, we are talking about global lockdown. So I expect a lot of hotels will have big problems. Okay. Then you can see from here, the manufacturing. The key problem for manufacturing is what? Supply chain. China may actually start their productions. However, some parts, they have problem. Some of the parts actually produced by other countries because of lockdown may not able to send over. So that's the reason why it's tough. China actually need to make sure that the supply chain actually all okay. Otherwise, it's no point. You go to the factory, you want to produce products, then your boss mentioned to you, oh, these parts needs to solve from this country. Oh, sorry, because of lockdown cannot. Okay. So, and you're talking about global, it's not Malaysia that recover, then or China recover, then everything okay, you know. Because some part actually produced in other country and they're locked down, okay, and they're facing problems right now. So the manufacturing actually disruption. So that's why it's a big problem now. Mining remain to be tough. Oil and gas sectors definitely tough. Okay, you can see from this diagram, worst is over. I think given the global lockdown, I think oil prices will remain low for quite some time. Okay, oversupply issues quite bad. Then you have all agriculture. You notice that our CPO price getting lower, touching 2,000 now. At one time, I think yesterday 1,009. The key issue is what? The key issue is actually our main buyer like India, Pakistan, Bangladesh, they're having problems. The number of COVID cases is getting higher. And they're, from the earlier, a few hundred, now it's actually, you know, like India's 1,000 per day already. And you know, it's 1,000 per day. The number will go very big later on. And you, in general, I think they have problem to cope with the increase in numbers. Okay, Bangladesh, Pakistan, India, these are our main buyer. No? Okay, earlier on, it's actually, you know, so that's why our export actually, you know, the demand was slow down. Of course, no, China may buy more from us on this palm oil. Construction sectors. What do you think construction sectors? I think it will be tough. Why tough? I ask you, if you look through the budget 2019-20, oil related, not I say, it's oil related, based on the budget, it's actually 50 billion. And our oil, the cost is actually 30, 40 per barrel. So given the lower oil prices now, 20 plus, what do you think of the 50 billion, the contribution to our budgets early on? I think the number will be tough. That means the Petronas are having tough time now. They may incur loss. May not be loss, but you know, sharp drop in profit also possible. Then how about the dividend contribution by Petronas? So all these will contribute to, you know, the revenue will be lower. I think one way is actually delay on those unnecessary construction projects. It may happen. Okay. To me, it actually may happen. And a lot of these companies facing tough time now may incur losses. Next year, tax collection also lower. This slide I share with you already. Oil prices will remain low. And because of that, the inflation will remain low. Okay. Now, this actually, you know, reported, you know, from our DG, LDG. Actually, 60% on the fertility is actually in age group 60 and above. And those with this based on those death. So out of these 100% death cases, 80% for those do have the health problems. So and our DG say that the age group 55, 60, basically 55, 50 plus and above, 60, 70, 80, 90, all this high group, the high risk group. Okay, my key point here is actually this will be a normal norm. Means that if you look through the statistics from China, on average, for those 70 to 79, means those patients age 70 to 79, the fertility rate actually is 8%. But those 80 is 14.8%. It means on average, roughly out of 10, 1 were gone. Okay, but if you have other health problem, then the chance will go very high. So in short, means that 50 plus 60, 70, you will notice that even in US now, some of them may not want to come out. In Malaysia, China, okay, some of them may not want to come out because they are high risk. So it will become a norm. The stock spending, the spending will be less, and they are basically refuse to high risk group. That's why because the risk to them is actually quite high. So this actually the suspected cases are actually from China. Okay. Now the last part for today is on the investment themes. As I mentioned to you just now, cash. Warren Buffett holding 130 billion cash. My view here is actually same thing, follow him, holding cash. Okay. And at the same time, if certain stocks actually have good values, you can buy. If you ask me which sector to buy, I would say consumer staples. This sector will continue to be good, high demand. You can see from Malaysia's index. Let me share with you on technology and healthcare related stocks. Okay, this is actually our KLCI. My view here is actually, the trend showing that it may come down. That's why you notice that towards afternoon sessions, selling will happen. You notice that actually a lot nowadays, actually, the words towards the afternoon session, selling will happen. I think fund managers selling. Okay. And this is actually our Bursa healthcare index. You notice that within 1 year, the index actually go even higher than February, our healthcare index. Okay. So same as technology index getting higher. So in short, is that not, if you want to invest, you can buy stocks in these two areas. These three areas: consumer sectors, technology related, or healthcare related. Still, these are the areas, at least from now. You may not want to buy now for those long-term investors, unless drop to the market go down to another wave sellings, then be prepared to buy those at lower levels. And as I said to you, from now until maybe year end, these few months, I don't know when will be the lowest point. Likelihood, if we are talking about next year, the economy will be the lowest point. Maybe the second of next year. Stock markets always acting ahead 6 to 9 months. That means likelihood the market bottom will be in fourth quarter. That means roughly about September, October. During winter time, when the cases getting higher, nobody dare to buy. Stock may come down. Okay. How about you say that what if let's say US able to get vaccine? As I said to you, that if you look through the earlier slide I shared with you on the strength pool on the 1976, and actually, if you rush to produce the vaccine, actually do have some complication later on. That's why Americans actually don't believe in vaccine. That is the reason. So to me, this scenario, you ask me will happen or not this year? I'm not too sure. But if you look through the 1976, that U.S. presidential elections, the president fought actually for one term only. Okay, so be holding cash, to me, waiting to buy good value stocks, or you can actually choose these are sectors. I think will be a good strategies if you want to invest. Then I share with you on the KLCI charts as well as healthcare charts, and last part actually the technology charts. Okay, that's all my sessions. Now Q&A sessions.
Okay, thank you so much, Mr. Ooi, for your wonderful sharing about whether the economy recovery is V, L, or U, and also some of the key investment themes for investors to consider, whether to keep cash or go into the sectors that you have just mentioned. So if any question you want to ask our speaker today, please write in the Q&A box, not in the chat box, okay? Because there's just so many comments in the chat box, so please write in the Q&A box so we can see your questions. So if you ask in the chat box, we are not going to pick question from there. Okay, so we already have many questions here on the Q&A. Now, the first question is, what do you think of a likelihood of a W-shaped recovery?
The Fed, J. Powell, says be prepared. Last few weeks, he already said, be prepared, not even W shape. Okay? You notice that all the Fed say to you that it's not U shape, it's not W shape. So actually, he implied to you that he actually indirectly want to mention to you is the L shape. So meaning to say, all this stimulus package actually help to support the economy, but in the end, after that, they need to have a second stimulus package and thus continue to keep QE1, QE2, QE3, all this will continue to come in to help to cushion the drop. Okay, I believe the Fed actually also know that it cannot be over that fast, and to me, not the W shape. Why is the L shape? Is because the later parts actually you see some of our stocks. You notice that when during March time, the prices some actually dropped to 70-80% already from their normal levels. So implies what? Some stock prices, some of them, if you look through in 2008 low, some of them even lower than 2008 low, no? And if you're talking about 80 to 90% drop from the previous peak, that means we're already in depressions. And definitely it's not V-shaped. W-shaped also unlikely. To me, it's actually if the market will slow down, then the whole dripping for quite some times, okay? In between we have rebound, but actually will continue to slow down. Okay, definitely, just like the Fed also says, it's not W shapes. Unlikely. Yeah. Back to you.
Sure. Now the next question is, will this recession become a depression?
The price already factored in. The definition of depression is actually, in normally, people label it, if the stock price dropped by 90% from the peak, it's considered depression. Some of the Malaysian stocks already dropped by 80%. So to me, we're quite close to the depression level already. And be prepared. It will going to come down and retest that levels. Okay, so yeah, the price already implied to you we are in this level. And some of them drop even lower than 2008 financial crisis. Cannot believe it, right? Yes, already happened. So I think it's definitely not over yet.
So the next question is, do you think that the Dow Jones will hit 30,000?
Oh,
right in like how long?
definitely not this year. Definitely not next year. As I said to you, it will reach 30,000, but not these 2-3 years. Okay, maybe as I said to you before, I says that 1920, after 1920, the Spanish flu, the Dow Jones actually have a world economy, not only Dow Jones, have a solid 9 years growth, until the stock market jumped all-time high until the Great Depression level, in 1929. That means the stock market jumped all-time high until everyone's so happy. So you ask me, it may even go up higher than 30,000 to 40,000, but definitely not this year, not next year. I think will be few down the road. But because after this, the COVID-19, I think the world economy will jump. I will jump to very high level. And this where the Dow Jones will getting higher and higher. It will surge past 30,000. But definitely not now. Next year, I don't think so as well. Okay.
So you feel that we might not hit 30,000 in the next 2 years. So
yeah.
The next question is, what do you think about this health impact to our ringgit strength? And then how is this, number one is ringgit strength, number two is how is this excessive monetary easing affecting us?
Okay, as I said to you just now, if you look through the earlier slide here, I think the risk of rating agency looking at us Okay, we are actually A minus. So, and you notice that other countries, all the Philippines, Thailand in general, no, they talk about the public percentage debt, foreign debt over GDP, all this. That in general, they actually rank higher than us, and they are talking about we're talking about BBB plus. We are A minus, so they are one rank lower than us. So, given that, no, our debt level high, so I'm not too sure whether they will review it. I said to you, you notice that rating agencies start to open their mouth right now. He says that all these emerging markets, be careful. So to me, it's indirectly implying that if you actually continue to have borrow money and to come out with stimulus packages, we may face downgrade risk. To me, the risk is there. Then this indirectly, we're talking about the ringgits. Okay, so because our ringgit actually 30 or 40% actually is a foreign holders. So the risk is there. At the moment, not happening yet. Okay, but I said to you, we need to be very careful, and then that's why and rating agencies not one already highlight that they are worried about all these emerging economy and start to come out with stimulus packages. See this situation exactly like 2009, when all these countries start to spend money and to revive the economy. Then 2010, one by one being downgraded, especially the European countries, Greece, Portugal, or Ireland, all this. So risk is there, and this will impact ringgit. Yeah. Next question.
All right. So when just now when you give some idea about investing in a tech sector, would you be able to give more specifically like which tech sector should we be looking at?
I think in general, I think my view here is actually quite difficult because actually you don't know which stocks. But things, if no disruptions, like for example, the Amazon, Alibaba definitely will do well. Okay, because they're actually not going to consume, so you actually buy online, definitely the stock will go higher and higher. So they will replace conventional other business. Okay, China also the same. Alibaba definitely will go getting higher. Some of you actually buy from the online. So definitely, then we do have other stocks actually like doing parts. So my view here is actually very hard to see. Some of them actually do face on the disruption of the supply chain. But in general, those like US, cloud, all this doing well. You look at Microsoft, all doing well. But some of the tech stocks in Malaysia, some actually doing well. Suddenly you notice that this quarter doing very well. Then suddenly the next quarter, because of the certain disruption here, then the price will hammer down, then analysts will downgrade it. So that is normally what happen in Malaysia tech stocks. They may get it, but suddenly because disruption of the production of all this, then suddenly the results not as good as analyst predicted, then the stock price will hammer down. So you ask me in general, it's quite tough. Of course, there's many different types of tax, not just on all these. Some actually doing supply to Apple, okay. Then optical inspection, all this. I'm not really too sure. But I'm sure that whether any this disruption will affect them or not, especially on the supply chain. Yeah. Next question.
Okay, so next question from Edmund. What do you see the future potential of Malaysian banking sector after this crisis?
As I said to you, it's tough. It's actually after 6 months. So now you actually say that you don't have to repay your loan for 6 months. Okay, you restructure it. Then after September, October, if you are still unable to service your loan, so how? Extend another 6 months? Until when? That is actually the key part here. My view here, because this lockdown, after open, it may have a second lockdown. you notice that the vaccine only available next year. Okay, if available next year. So will be a normal norm. Okay, so some actually may not have a cash to actually service loans. So banking sectors don't have tough time. Then how about the oil and gas counters? So all banks actually do have exposure to oil and gas sectors. As I said to you, the capex from Petronas will be affected, and our production, our cost of per barrel is actually higher. Okay, and last budget actually, we actually projected based on the oil prices of 62, even right now 20 plus only. So, and it will stay low for some time. So my view here is actually banking stocks, and you start to see, one oil trading company in Singapore is having problems. So I think, and Malaysia later on may have some problem with some oil and gas companies. So this all will affect the banking balance sheets. MBL will surge. Then especially the crucial part is after September, October, after 6 months later. That is actually the crucial part. Then the bank and government have to sit down and think, extend another 6 months. Then how are you going to treat your balance sheet? Then if I say unable to serve it for that long, 1 year, the level will go higher, no? So I think challenge for banks. I think banking sector definitely have a tough time. Yes. Thanks to you.
Okay. Well, wow. Okay. Now, let's talk about healthcare. Well, just now you also talked about healthcare, right? So I guess there are many people asking about healthcare. With healthcare stock right now, for example, glove sector,
yes,
also at quite high already, all-time high, historical high. Do you suggest that we take some profit off the table and wait for the price to go down, only buy, or we should invest right away?
I think no harm taking profits. Okay. To me, it's actually no harm taking profits actually right now. Okay, because if let's say market going through some corrections later on, of course, if some investor actually don't have money, also they will sell down, the price will come down. But when they rebound, they will rebound faster and go higher than the current level, also possible. So my view here is actually, if you actually want to take profits, no harm taking profits, not wrong at all. I mean, after making money already, after all, and this thing will not go away right now. It will be quite some time. So when it rebound, you always will rebound even higher. So my view, my suggestion will be, take some profits, but keep the rest actually, the main part actually keep it, because these whole things actually will not end right now, and will be dragged until next year. You notice that like our neighboring country, the numbers actually growing, like Indonesia, all this growing, the number growing very high. I think like I said to you, the Pakistan, Bangladesh, India, you notice that the Arab country also, the numbers are getting higher, and the curve is actually getting higher. So definitely the demand for how the glove, I think, will be higher. The business will continue to do well for a while, at least a few months, until maybe year end, until next year. They may not able to cope right now the demand. And we are talking about one wave one, then you have a second. This actually the summer time. We are talking about the hemisphere for example, the New Zealand, Australia, they're actually winter time right now. Okay, same as the South America, South Africa as well. So you notice that they're actually having winter right now. Then the number may go up. Then after that, when come to September, October, we're talking about North Hemisphere, we're going to have a problem again. So to me, we are talking about wave 1, wave 2, wave 3, wave 4. That's why it's tough. That the demand for healthcare products definitely, as long as the vaccine not available, I think the business will continue to do well. Yeah.
Okay.
Prospect, yeah.
Yeah. So also bear in mind that not all countries has a lot of testing kit available. So the number are still not yet the true reflection of the real cases.
I will consider them as black holes. actually you don't know what actually the cases. How many
Yeah.
actually they don't actually know. They will not even know. Yeah.
Okay. But what happened to people who like not yet invested in glove stock or healthcare stock, but thinking should we go after them right now? Should we buy a high price, waiting for it to go higher, or should we wait for the
I think
price to
wait for
go
market
down?
to come down for a while.
Wait for okay. So
Ah,
your okay.
yeah. If let's say really come down to quite attractive level, no harm. Because when the kind of panic, you must understand right now, with the US presidential election right now, I think the relationship between China definitely will be the key main things. So definitely, and you're going to talk about the number going to surge to high again the second wave. So I think the Donald Trump actually definitely have under tremendous pressure, and this will definitely the relationship with China definitely will not be good. So you not notice that the trade talk definitely whatever trade talk they call each other, that definitely after that you notice that the Donald Trump will continue to want to impose the second or third one, all the tariff, all this will come back already. So and this will affect stock markets. So wait until the price down, then it will affect the global stock market. Then attractive prices, then you may want to buy. Wait for the corrections.
Okay. Now this question comes from Kai Yi. Do you think this year we will have sell in May and go away impact?
I think coming soon already.
Coming soon,
My view. The reason why you notice that actually, they actually just marginally higher than the 30 days, 20 days moving average. Now market is actually, whatever bad news, less bad news considered good news. And I just mentioned to you just now, even the economy also says the dangerous gap already. So, and you notice that a lot of gurus says that they're actually holding cash. Even CNBC, if you listen to the CNBC on the fast money, you notice that they're actually holding more cash. Even though they say buy, they say buy a bit, but they're holding more cash. All this Warren Buffett also holding more cash, they also anticipate that. If you notice that right now the curve actually, is just touching on the blue line. The market is just waiting for one bad news. Once actually, break the blue line, the 20 days moving average, and then you go down to retest the 18,000 again. But of course, because of all this stimulus, will depends how bad the whole things are. So if let's say the number really surge like the US internal report from the CDC, that the number may surge 200,000 per day, I think the lockdown will happen, and that part, the whole thing actually will go down even lower than 18,000, because the impact will be huge. Yeah. Next question. Yeah.
So do you this year US will have the presidential election, and do you think that the Trump will use this, will push up the stock market in the US before his election?
Because these are actually the indicators, but you notice that the numbers all bad, so it's a tough time. If you look at the history, during the US presidential election, if that year is actually in economic recession, very high chances that actually will lose.
Okay, so your forecast is Trump will not win the second term, lah.
I think he has a tough time. As I said to you just now, I share with you that 1976, okay, on the President Ford, actually he lost the elections. Okay, that's why he has only one term. So you ask me, I think it's a tough time, really tough time actually. And when you talk about later part, when asked, if I say the Trump says we finally get the vaccine, that 1976 swine flu experience you will see main media start to talk about that, and the American will not get vaccinated with that, the vaccines. So I think American right now actually quite cautious, So to me, I think this definitely will affect him. He thought maybe a plus point to him, but I think not everyone really trusts. Okay, and if I say economy bad, I think it's quite tough for him. It's quite hard to push up the market, given that the fundamental the companies that may be affected. Not all, but quite a number actually having problems. Of course, those tech stocks were going to do well. but others actually, having tough time.
So with a lot of QE or money printing going on in major developed countries and economies, there are a few more questions on your perspective on gold and precious metal. Can you share with us?
If you look through the history, okay, each time of the QE, you notice that the gold prices are getting higher. Actually, gold prices last time actually getting higher, surged to beyond 1009 when you have QE1, QE2, QE3, people lost confidence in actually US dollars. Will it happen again? I think it may happen. It may go beyond 1009. Okay, because this definitely, the Fed already says definitely not one QE, will be a second QE and more QE. So to me, the gold prices may go higher. Okay, and the debt level is getting higher and higher. So the trust in US dollars may be less, and you're printing more money. So people, don't want the US dollar depreciate. Ultimately, some actually may move to gold. Okay, to preserve values. Okay, next.
What do you think about 5G, this industry? What stock, if you think 5G will go, what stock should we pay attention to?
I think in general, I will not go into the stocks. I think I will say that in general, the technology sectors will do well. Okay, it's just that some actually the valuation is quite high. My view here is actually whether they can sustain that kind of valuations or not. Another issues. You ask me, I will not rush in right now. Okay, of course, we are actually some already priced in all these 5G things. So to me, some actually doing well. So, but to me, it's actually the valuation is quite high. Whether can command that kind of valuations. Okay, so to me, 5G definitely will be the in thing. Okay, but key part here right now is actually given this sort of tough economic situations, okay, a lot of business actually affected. Okay, a lot of capex will be lower, so things, the money actually putting in on the technology development, all this I think may not be very high. Not normal. Not many companies want to expand their business during this period of time. Okay, the technology definitely will be good, but not many people want to expand the business during this period of time. Yeah, next question.
All right. So what do you think investing in bonds or bonds fund?
Short-term bond, yes, okay. Long-term bond, I think is tough. Okay, because when actually with all this QE start to increase money supply, of course the oil prices will continue to be low. Yeah, but we don't know when actually the inflation will spike up. Okay, does not mention that oil prices will continue to be low. Okay, but we are talking about the OPEC actually start to cut productions. But of course, we do have a smaller country may not want to follow the OPEC. Okay, so my view here is actually we don't know when the price will jump. Okay, because they actually keep on they're actually cutting this month onwards, so it may jump. So we are talking about the oil prices may jump later on. Then inflation will come in, then will affect bond prices, especially long-term bond. So given actually the printing money with higher inflations, then long-term bond may underperform later on with the high inflation rates and higher yield. Next question.
Okay, let's do one last question because we actually exceed time already.
Yeah.
So this question from David. So do you think KLCI index will retest the March low or maybe broke the March low?
If you look through the report by KLCI, okay, recent low is actually 1,001.80. Okay, so my view here is actually some research report saying that 1,000 levels. My view here is actually with the curve of short selling, I think not many traders able to short the markets. the index may not drop to very low level, but the key part here is actually I think will come down. It tried to test to below 1,003 one more time. Every day you notice that afterwards, afternoon it was selling start to come in already. So it will try to test 1,002. You ask me whether it will test 1,001, 1,000 levels. Some research reports showing 1,001, 1,000 level. I think will roughly, it may drop below 1,002. Okay, if I say the second wave of selling, we are talking selling may go away. It may happen. Okay.
All right.
Yeah.
So likely happen, broke 1,002. So if you have a lot,
you look at the technical chart, you also mentioned to you it's actually it can happen.
Yeah, it looks like the gap have not been able to close above here. Now we are nearly closing. 1,415 like that.
The fundamentals actually it's quite weak. Look at China as well. If you look at Ooi Kok Hwa, the 1st of May, that kind of holiday, actually the year-to-year sales actually dropped by 50%. No? Of course, you compare to previous month, the number jump, but you compare to year, it's actually dropped by 50%. No? So don't get too excited about China, because of China will boom that help the world economy. Of course, they actually now start production, but they're also having tough time. Talk about supply chain, okay, and I think it's tough, really tough. So we're talking about, and if that company actually doing worldwide business, like commodity CPO, we're actually doing the demand from all these countries, There's I mentioned to you, India, Pakistan, Bangladesh, you're talking about Africa countries, all this, the demand will be lower. That's the reason why the recently touched on 1,009. You ask me, CPO, it may go below 1,009. Will go below the recent last year low of 1,009. It may go below that. Okay? Maybe, I'm not too sure how low it will drop. It will low. That's the reason why while the Spanish stock or plantation shares went up, you notice that the CPO price actually came down. So I think only retailer get excited. So I think be careful.
Yeah, so you were saying that the worst for the palm oil have not come yet.
Yeah. I mean the disruption, because you are talking about the global demand. So not Malaysia okay, that means okay. We are talking about global. So to me, it's actually tough already. If that sector is actually, they are doing business worldwide, then the disruption, because if we're going to have one wave, the second wave, the third wave, it's tough until next year.
All right, so maybe you should keep some cash now, as you suggested, and look into a consumer staple like maybe Nestle, F&N, or maybe go to
you were buying
healthcare sector.
Yes, will do well.
Or tech sector.
The price actually cheap, then you buy. But other sectors, the rest will be need to be very careful.
Yeah, quite tough lah. So that's the idea. All right, so let me just share my screen right now to tell you when is our next webinar. Okay, so our next webinar, the topic is Unleash the Tactics of Dissecting Technical Charts. So in this webinar, you'll be able to ask our speaker to dissect any charts for you, and he will share with you the short-term trading plan and how you can trade this kind of market. Okay, you can ask him any charts. So it happened on 19 May. It's a Tuesday, 8:30 to 9:45. It's a couple of days before Raya period. So tune in on the 19th May. You can register in the link. Okay, I've just given you in the webinar chat box, and also as well as I leave it comment on the Facebook Live. If you are catching it from Facebook, then you can find the link to register for our next webinar, where we'll be able to ask our speaker directly to dissect any technical charts for you, to tell you where are the possible entry and possible exit. So then this webinar is brought to you by Kenanga. So of course you have to talk about the benefit of trading with a Kenanga account. So you want to if you haven't had an account, now I understand that over the last MCO period, there are so many account opening requests, especially with Kenanga. So if you haven't signed up an account with Kenanga, please go to the link that I shared in the web box, with the webinar chat box, and also in the Facebook Live comment section to sign an account with Kenanga. Of course, due to overwhelming response, so we will do our best to cater to you. Okay. So if you haven't opened, please find Kenanga to open an account. Of course, if you already have an account and you're thinking to have one more, of course, you can also talk to our friendly broker from Kenanga. Okay, they'll be able to help you to open a stock trading account. In fact, I myself is also a Kenanga client. Now, thank you so much, Mr. Ooi, for sharing your idea with us today about your perspective on economy recovery, whether UL or V shape, and not possibly W shape, and also some of the key ideas where we can invest our money.
Yeah.
Right, and I believe that many of us today have benefited a lot, and see that many people are saying that this is very helpful. Thank you so much. So yeah, thanks everybody. Most importantly, thanks all of you for tuning in on a Friday evening to join this webinar brought to you by Kenanga. Right, so I hope to see you all in our next webinar by Kenanga. All right,
Thank
this
you
is
very
Shane
much.
Chu signing off. Bye bye.
Thanks.